Stop looking at the press conference in Brussels. Stop looking at the diplomatic handshakes or the polite smiles of the European Union ambassadors. That is theater. That is a hallucination designed to keep you calm while the machinery of your financial destruction is bolted into the floor. Look at the data. Look at the DAX index in Frankfurt. Look at the order books of Volkswagen and BMW. They are bleeding. This is not a market correction. This is a kinetic liquidation of the German industrial model. The archivist is here. The system time is verified. The protocol is active. What you are witnessing in the last 24 hours is the final, brutal end of the Atlantic Alliance. It is the end of the polite fiction that the United States and Europe are friends. They are not friends. They are competitors for a shrinking pool of physical resources. The United States has just issued a burn notice on the German economy. The weapon is not a missile. The weapon is a 25% tariff on the automotive sector, triggered by a dispute over an island of ice that most of you cannot find on a map, Greenland. The headlines call it a diplomatic spat. The data calls it an execution. The United States has realized a terrifying truth. In the age of artificial intelligence and electric vehicles, the one who holds the rare earth elements holds the future. China knows this. Beijing has already banned the export of critical processing technology. They have locked the gate. The United States is trapped. They are desperate. And a desperate empire does not have allies. It has hostages. Greenland is the only exit. The Tunbreeze mine in Greenland holds 28.2 million tons of rare earth resources. It is the largest deposit of heavy rare earths outside of China. It contains dysprosium. It contains terbium. These are the vitamins of modern warfare. Without them, the F-35 does not fly. The Virginia-class submarine is blind. The United States demands control. Washington has issued an ultimatum: hand over the mining rights, or we will crush your economy. They have targeted 8 European nations. But the real target is Germany. The German economy is built on one premise: exporting high-quality machines to the world. That model is dead. It died the moment the United States decided that resource sovereignty was more important than NATO. The tariffs are set to hit 10% on February 1st. They escalate to 25% in June. Do you understand the math of a 25% tariff on a BMW made in Munich? It wipes out the margin. It wipes out the profit. It turns a luxury asset into a dead weight. The market knows this. That is why Volkswagen stock is diving. That is why the DAX is red. But the story gets worse. You are focused on the cars. You should be focused on the metal inside the cars. Deep beneath the headlines about tariffs, there is a second war raging, a silent war. The war for silver. You cannot build a German Mercedes without silver. You cannot build a solar panel in Bavaria without silver. And right now, there is no silver. The price has smashed through $94 an ounce. Why? Because the supply chain has snapped. Look at the forensic data from Peru. The government in Lima has just criminalized 300,000 miners. They have shut down the reinfo program. This is not a bureaucratic change. This is a supply shock. These artisanal miners provided 20 to 30% of the feed for the refineries. That feed is gone. It has vanished. At the same time, look at the ports. Maersk is gambling with your inventory. They are sending ships back into the Red Sea. They are betting that the missiles will miss. The insurance underwriters do not agree. The risk premium for a voyage through the Suez Canal just hit $1.5 million per ship. That is a tax. That is a direct levy on every component that goes into a German factory. Germany is being squeezed from both sides. To the west, the United States is closing the market with tariffs. To the east, the supply of raw materials is being choked off by chaos in the Andes and export bans from China. This is the gherkin strategy. Germany is the pickle, And the jaws are closing. The European Union talks about retaliation. They mention a 93 billion euro package. It is laughable. It is paper. You cannot fight a resource war with paper. You cannot print dysprosium. You cannot print silver. The United States knows this. That is why they are going for the throat. They are forcing a choice. Either Europe surrenders its sovereignty over Greenland, effectively handing over the keys to the Arctic, or Europe watches its industrial base disintegrate. This is the great repricing of reality for 70 years. Europe lived under the security umbrella of the United States. That umbrella has closed. It is raining, and the rain is acid. The archivist looks at the ledger. The German industrial complex is a zombie. It is walking, but it is dead. It relies on cheap Russian energy. That is gone. It relies on open American markets. That is closing. It relies on just-in-time supply chains from Asia and South America. Those are broken. What remains? A hollow shell, a museum of combustion engines in an electric world that it cannot afford to build. The investors who are holding European equities right now are not investors. They are philanthropists. They are donating their capital to the abyss. Let us analyze the bag holders. Who pays for this? It is not the CEO of Volkswagen. He has a golden parachute. He has Swiss bank accounts. The bag holder is the pension fund. The bag holder is the insurance company that holds German sovereign debt. The bag holder is you. If you have a 401k with international exposure, you are holding this toxic waste. You are exposed to a jurisdiction that is being systematically deindustrialized by its closest ally. The United States is not doing this out of malice. It is doing this out of physics. The US military needs the rare earths in Greenland. It is a matter of national survival. If killing the German car industry is the price to pay for securing the guidance systems of American missiles, Washington will pay that price. They will pay it with a smile. They will call it national security, and Brussels will write a strongly worded letter. The divergence is clear. The United States is pivoting to a resource realism economy. They are securing the dirt. They are securing the metal. Europe is clinging to the fiat-trust economy. They believe that rules and treaties still matter. They do not. In a kinetic world, the only law is capacity. Do you have the mine? Do you have the refinery? Do you have the navy to protect the ship? If the answer is no, you do not have an economy. You have a hobby. The silver market is screaming this truth. The backwardation in the COMEX is a fire alarm. When the spot price is higher than the future price, it means the market does not believe there will be metal in the future. It means give it to me now. The industrial buyers, the Samsungs, the Teslas, they are terrified. They are paying premiums to secure physical bars because they know the paper contracts are worthless. They know that if they stand for delivery in London, the vault might be empty. Or worse, the vault might be sanctioned. The discount on gold at the Bank of England is the smoking gun. Why is gold cheaper in London? Because you cannot get it out. It is a lobster trap. You can put your gold in. But try to take it out when the geopolitical friction heats up. The queue is long. The liquidity is dry. This is the definition of counterparty risk. The system is blinking red. We must go deeper into the specific mechanics of the German collapse. It is not just the tariffs. It is the leverage. German industry is highly levered. They borrowed cheap money to build factories, assuming globalization would last forever. That assumption is the collateral, and the collateral has just been marked to zero. The cost of capital is rising. The yield on the US 10-year Treasury is rising. This sucks capital out of Europe. Why would you hold a German bond yielding 2% when the US Treasury yields 4% and the US has the guns and the oil? The capital flight from Europe to the US is accelerating. This strengthens the dollar index slightly in the short term, but destroys the euro. A weak euro makes importing energy and raw materials more expensive for Germany. It is a death spiral. Inflation rise, margins fall, insolvency follows. And let us not forget the timing. This is happening just as China creates a shortage of silver. China dominates the refining of silver. They are keeping it for themselves. They need it for their 5G grids and their solar farms. They have issued a soft ban. They are delaying export licenses. This means the German solar manufacturers, who were already struggling, are now cut off from their lifeblood. They cannot compete. They will close. The German green transition is dead. It was murdered by a lack of physical silver. This is the reality of the supply chain. It is brittle. It is stretched. And it is snapping. The strike at Escondida in Chile is the final straw. That is the world's largest copper mine. It also produces silver. If that mine stops, the global deficit widens. The price goes parabolic. But the German factories cannot pay the parabolic price. Their margins are too thin. So they stop. They declare force majeure. They lay off workers. The social contract in Europe breaks. This is what the archivist sees, not a recession. A structural deletion of an entire economic zone. The Greenland ultimatum was the trigger. But the dynamite was laid years ago. Now, we must discuss the deception of the Suez gamble by Maersk and how it accelerates the German demise. Maersk Cornelia is sailing into a kill zone. They are desperate to cut costs. They are desperate to shorten the transit time by 14 days. But this creates a new risk. If a missile hits that ship, the insurance rates do not just go up. They go vertical. Lloyd's of London will declare the route uninsurable. Then, every ship must go around Africa. The delay becomes permanent. The cost becomes permanent. For a just-in-time manufacturer like BMW, a 14-day delay is not an inconvenience. It is a production line stoppage. It is a default on delivery contracts. It is billions in penalties. And while Maersk plays Russian roulette in the Red Sea, the roads in Mexico are blocked by cartels and farmers. The roads in Peru are blocked by miners. The arteries of the global body are clogged. The blood is not flowing. The German industrial heart is pumping. But there is no blood. It will go into cardiac arrest. The symptoms are already here. Look at the stock prices. Look at the panic in Brussels. They know they are powerless. They cannot sanction the US. They cannot fight China. They are alone. This is the geopolitical reality of 2026. The strong do what they can, and the weak suffer what they must. The US is strong. China is strong. Europe is suffering, and you, if you hold European assets, are suffering with them. The protocol for this specific scenario is clear. You must divorce yourself from the victim. You must remove your capital from the impact zone. The impact zone is the European Union. The impact zone is the debt of industrial manufacturers who rely on complex global supply chains. They are fragile. They are uninsurable. You must move to the predator side of the equation. Who wins in a resource war? The owner of the resource, the United States energy sector, the Canadian mining sector, the companies that dig the holes and pump the oil. They have the leverage. The paper price of silver at $94 is just the beginning. It is a fictional price. The real price is what you pay to get the metal in your hand. And that price is detaching from the COMEX. We are witnessing the bifurcation of price. There is a paper price for the speculators and a physical price for the survivors. You want to be a survivor. You want to hold the asset that cannot be printed by the ECB and cannot be sanctioned by the Treasury. You want gold. You want silver, but not the ETF. The ETF is a claim on a vault that might be empty. The ETF is a promise, and promises are breaking. Look at the discount in London. That is the sound of a promise breaking. You must hold the physical metal or the equity of the miner in a safe jurisdiction. A safe jurisdiction is not Peru right now. It is not Chile. It is North America. It is Australia. The map is being redrawn. You need to look at the map, not with political eyes, but with geological eyes. Where is the metal? Who controls the army that sits on the metal? That is where the value is. I am not telling you to short the euro. Currency speculation is a casino for algorithms. I am telling you to exit the euro. Convert your purchasing power into something that outlasts a trade war. The 1930 Smoot-Hawley Tariff Act worsened the Great Depression. We are repeating that mistake. But this time, we have nuclear weapons and hypersonic missiles. The stakes are higher. The speed is faster. The algorithms will sell the DAX faster than you can blink. Do not try to trade the noise. Position for the structural shift. The structural shift is the death of the fiat-trust system and the birth of the resource sovereignty system. In this new system, Germany is poor. Greenland is rich. Adjust your portfolio accordingly. This is the financial advice that the television will not give you. They will tell you to buy the dip. Do not buy the dip. The dip is a crater. The crater is filled with the wreckage of the German automotive industry. Do not jump in. Stand on the edge. Look down and learn. I ask you to perform a specific audit of your own life. Do not just nod your head. Stand up. Go to your garage. Look at your tools. Look at your spare parts. Look at your filters, your spark plugs, your batteries. Where were they made? Are they Bosch? Are they Siemens? If the supply chain from Germany stops tomorrow, how long can you keep your own machines running? Do you have a replacement alternator for your vehicle? Do you have a backup solar inverter if your German-made SMA unit fails? The global inventory is drying up. The parts are not coming. If you rely on a specific medicine produced in the chemical clusters of the Rhine Valley, do you have a 6-month supply? The insulin, the antibiotics, the specialized reagents. Germany is the pharmacy of Europe. If the pharmacy burns down, do you have a backup? But this is not a theoretical question. This is a supply chain audit. The insurance adjusters have left the building. The risk is now yours. You are your own logistics manager. You are your own central bank. Act like it. This is the archivist. The data does not lie. The map has changed. The protocol is active.